Okay, get this. Over half of all first-time investors started out on platforms like Robinhood. Just think about that.
Right.
And you're here because, well, you want to get what's driving these big shifts in finance, right? Get informed quickly, but with real depth.
Yeah, absolutely. And that's exactly what we aim to do.
That's our goal today.
And, to really get that depth, especially when a company is planning to go public, there's this one document you have to look at,
Yeah.
the S-1 filing.
The S-1, right.
So today we're diving into Robinhood's S-1. The specific one is from July 1st, 2021.
Okay.
And it gives us this really fascinating snapshot, a look under the hood at their finances, their operations, basically right before they hit the public markets.
So our mission here is pretty straightforward. Pull out the most important stuff from this pretty dense document.
Definitely dense.
We want you to walk away really understanding Robinhood's financial picture back then, the key numbers, their plans at that specific moment, without needing to read hundreds of pages yourself.
Exactly. So let's start with just some initial observations, maybe some key info right off the bat.
Sounds good.
First, that date again, July 1st, 2021. It's crucial because companies often amend these filings. They update them.
Right. So this is a snapshot, but maybe not the final version before the IPO actually happened.
Precisely. For the absolute latest, you'd always check for amendments.
Got it. And what else? I saw something about a registration fee.
Yeah, interesting little detail. To even file this with the SEC, Robinhood paid a fee. Just over $10,000, $10,110.
Huh. Seems small for an IPO, but I guess it's part of the process.
It is a necessary step. Now, something that often confuses people when they first look at an S-1 is the share price listed way early on.
Oh, yeah.
You'll see this tiny number, like a fraction of a penny.
Right. Not exactly inspiring confidence if you don't know what it is.
Exactly. But it's just a placeholder. It's nominal. It's used for calculation purposes before they actually figure out the real IPO price.
Okay, that makes sense. So it's not the price anyone was actually going to pay.
Not at all.
But speaking of price, there was a lot of buzz around what it would be, wasn't there? I remember seeing speculation, maybe like $80 to $100 a share.
Oh, yeah, there absolutely was. We saw that range mentioned, I think attributed maybe to a video, but it was clearly labeled as speculation.
Important distinction, speculation.
Very important. But it definitely shows how much anticipation there was. High interest in this one.
And that ties back to their mission, right? To democratize finance for all. That massive number of new investors we started with really shows they were tapping into something.
Absolutely. That mission statement connects directly to that user growth.
Okay, so they've got the users. How were they actually, making money at this point? What did the S-1 say about revenue?
Right. Revenue sources. A really big chunk, around 50%, actually came from options trading.
Wow, half their revenue from options. That's significant. That really tells you something about their user activity and risk profile, maybe.
It's a core part of their business model, or at least it was then. And to give that revenue some context, let's look at the user numbers in the S-1.
Okay.
They reported 18 million net community-funded accounts.
18 million. That's a lot of accounts with money in them.
It is. And alongside that, 17.7 million monthly active users, MAUs.
Almost the same number. So people weren't just opening accounts, they were actually using them frequently.
Seems like it. High engagement.
Yeah.
And think about the assets they held for these users, assets in custody, or AUC.
Well, what was that number?
$81 billion.
Oh, okay. $81 billion. That's,
Okay.
Yeah, that puts the scale into perspective.
It really does. And what's also interesting is how they got these customers.
Oh, yeah. Was it all advertising?
Apparently not. The S-1 stated that over 80% of their customers came in either organically, so finding Robinhood on their own, or through referrals from existing users.
80%. That's impressive. Suggests strong word of mouth, maybe that network effect.
Yeah, could be. Or maybe just hitting the right market at the right time.
Okay, so massive user base, tons of assets, lots of organic growth. Now, the IPO itself raises money. What did they say they do with that money? The use of proceeds part.
Right, the use of proceeds section. Always important to check that. Tells you how the company plans to spend the cash it raises.
So what were Robinhood's big plans?
Well, in this particular filing, it was actually pretty generic. They mentioned repaying some debt.
Just repaying debt. Not like specific growth initiatives or acquisitions.
Not detailed in this section here, no. Sometimes companies are more specific, laying out investments in R&D or expansion. This was broader. Investors often look for more detail there.
Okay. And what about dividends for investors looking for income?
Ah, yes, dividend policy. The S-1 was clear. Robinhood had never declared or paid cash dividend.
Right.
and it stated they had no current plans to start doing so.
Which isn't that unusual for a tech IPO, right? They're usually focused on growth.
Exactly. It's very typical for growth stage companies. They prefer to reinvest any earnings back into the business, hiring, tech, marketing, rather than paying them out.
But it doesn't mean never. It's just not planned at that time.
Correct. Doesn't rule out future dividends if the company matures and becomes consistently profitable.
Okay, let's dig a bit deeper into the actual financials then. Cash, assets, liabilities, what did that picture look like?
Sure. So cash and cash equivalents, basically. Money readily available. They reported $4.7 billion.
4.7 billion. That's a healthy cushion.
It is. And just a note for anyone looking at S1s, figures are often shown in thousands. So when you see $4,700,000, you have to add the 3 zeros. It means billion in this case.
Good tip. Okay, so $4.7 billion in cash. How about total assets versus total liabilities? The balance sheet basics.
Total assets were listed at $15 billion.
15 billion. Okay.
And total liabilities were $8.8 billion.
So assets quite a bit higher than liabilities, generally what you want to see.
Generally, yes. A positive sign for financial stability. However,
Uh-oh. There's always a however.
there often is. The S1 also showed a really significant net loss for the part of 2021 leading up to the filing.
How big a loss?
$1.4 billion.
Wow.
$1.4 billion net loss just in those first few months of 2021.
Wow, okay. Especially when you compare it to, didn't they actually make a tiny profit in 2020?
They did. A very small one, but yes.
Yeah.
The S1 mentioned a $7 million profit for the full year 2020. So quite a swing.
$7 million profit to a $1.4 billion loss. How do you frame that if you're Robinhood? Is that just the cost of growth?
That's often the narrative, yes. Pre-IPO companies frequently ramp up spending massively. They're pouring money into acquiring customers, building out the platform, marketing.
Marketing. You mentioned that. Did the S1 break down expenses? Could you see that spend?
Yes, it provided a breakdown of operating expenses.
Mm-hmm.
And marketing definitely stood out.
How much?
In just the first part of 2021, they'd already spent $102 million on marketing.
$102 million. Just on marketing in less than 6 months.
Yeah, you could definitely feel their presence everywhere back then. Right. It shows how aggressively they were pursuing user growth in a competitive market.
Okay, makes sense. What about the people running the show? Executive compensation. Did the S1 give insight there? Sometimes you see huge salaries even when a company is losing money.
It did provide details. For 2020, the salaries for both the CEO and the CFO were listed as $400,000 each.
$400. I mean, obviously a lot of money, but for a company that size, about to go public, maybe not as astronomical as some.
Yeah, you could say that. It didn't immediately jump out as ridiculous, especially compared to some situations where executives pull down multi-million-dollar salaries while the company is heavily in the red. So perhaps not too bad is one way to put it in context.
Right. Okay, so we have the financial picture, the user base, the spending. Let's get to the really big question, the IPO valuation itself. What were they aiming for, and what did that mean for the potential share price?
This was a hot topic. Robinhood was reportedly targeting a valuation of around $40 billion for the IPO.
$40 billion. And what was their private valuation before that?
Reports put their last private valuation around $12 billion.
So $12 billion to $40 billion, that's more than a threefold increase they were shooting for. A big step up.
A very significant jump, yes.
And how many shares were they planning to offer, does the S1 say?
It indicated an intention to offer 100 million shares to the public.
Okay, so 100 million shares. If they were aiming for $40 billion on a $12 billion prior valuation, does that give us a potential share price? Can we do some back-of-the-envelope math?
Well, if you just took that $12 billion valuation and divided by the 100 million shares they intended to have outstanding after the offering, including the IPO shares. Wait, no, that's not quite right. Let's think. If the target was $40 billion and they're offering, say, part of the company via those shares, it gets complex fast. But maybe working from the 12B pre-money and assuming the $40 post-money target? Let's see. Perhaps simpler think about price talk.
Right, because what people were really talking about was the IPO pop, wasn't it? That first day surge.
Exactly. That was the big speculation. Given how popular Robinhood was and how IPOs often do jump on day one,
Yeah.
many analysts were predicting a significant pop. Maybe the stock opens, in the official range, but then quickly trades up much higher. We heard talk of maybe $70 or $80 per share on that first day.
So potentially doubling or close to it right away?
Potentially. That kind of volatility is pretty common with these really high-profile, high-interest IPOs.
Right. I even remember hearing about people planning strategies, like trying to get in with a limit order around $60 or something.
Yeah, people try that. But of course, with huge demand, getting your order filled at the price you want in a hot IPO, well, that's never guaranteed.
No kidding. It really underscores just how speculative IPO investing can be, doesn't it? All that excitement and momentum.
Absolutely. Drives prices fast,
Oh.
but you have to remember the risks are definitely there too.
Okay, so let's try and wrap this up. We've covered a lot from that S1. For you, the listener, what are the absolute key takeaways from this deep dive?
I'd say fundamentally, the S1 showed Robinhood as a company experiencing really rapid growth,
Hmm.
huge user base, very active users.
Right.
A business model at that time heavily reliant on options trading for revenue. They had a lot of cash on hand,
Mm-hmm. That $4.7 billion. dollars.
but they were also burning through cash, operating at a significant net loss, likely due to investing heavily in growth and marketing.
And the IPO price itself was a big question mark. Lots of speculation, potential for that big first day pop.
Exactly. High growth, high engagement, substantial cash, but also significant losses. And that IPO price uncertainty, that's the snapshot.
And we really hope unpacking this S1 gives you, our listener, some valuable context, helps you understand the key numbers, the strategy, what to look for when a company like this goes public. It's about getting you that informed perspective without getting totally buried in the detail.
Yeah, hopefully some real aha moments in there about what drives a business like this.
Definitely.
And, maybe it leaves you with a final thought to chew on.
Oh, yeah. What's up?
Well, think about it. You've got this platform built heavily on attracting first-time investors.
Yeah.
You saw how much they were spending on marketing to get them.
Right.
So looking forward from that point in 2021, what do you think were the biggest opportunities that model presented for Robinhood as a public company? And maybe more importantly, what were the biggest risks or challenges inherent in that strategy?
Opportunities versus risks, especially with that user base.
So-
That's a really interesting question to think about as you watch how things unfold in the market, something for you to definitely consider.